Hey everyone, it's Dave. Welcome back to the channel. Thank you so much for tuning in as always. It's a very busy time right now, what with Rocket Lab's earnings just having happened, the Q3 earnings call that is. Thank you to everyone who tuned in live with me to listen to the earnings call and discuss the results afterwards. It was an extremely long call, about 2-ish hours. We had record numbers of live viewers as well as a lot of people subscribing, super chats, and new members, so thank you all to everyone who participated. But I fully understand that a lot of people out there don't have 2 hours, so this is your highlights video. I'll try to keep it to 15 minutes or less, just the big takeaways from Q3's earnings call. Before we dive into that, I hope you'll consider hitting subscribe if you haven't already. Every new subscriber is very much appreciated, as well as the current subscribers. You guys are the best. Okay, with that out of the way, let's dive into Rocket Lab's Q3 earnings call. Alrighty, so obviously you've probably already noticed, but the markets did react quite favorably to the earnings call. We had quite the pop. The stock the next day was up something like 40% at one point before kind of trailing off, closing the day up something like 28%, I believe. Still a very strong outperformance. So what exactly was everyone seeing that they loved so much? Well, before we get into that, did just want to acknowledge that yes, yesterday was a down day and Rocket Lab dropped, I think it was like 5, 6, 7%. Not really shocking after such a big gain, but we're up again today. So things rebounding nicely there. Okay, the very high level numbers, first of all, and we're just going to compare them with the guidance just to see how close they were to the mark. They guided for $100 to $105 million in revenue, and they hit exactly the top end of that range at $105 million, so very good. GAAP gross margin was projected to be between 25 to 27%, and they hit 26.7%, so almost at the very high end of that range. Non-GAAP gross margin 32 to 30, and they hit 31.3%, so higher end, but not quite as high. Adjusted EBITDA, they were seeing negative 31 to 33, and they hit negative 30.9, so slightly beating on the adjusted EBITDA mark. As well, they did issue guidance for Q4. The big top line number is revenue, obviously, $125 to $135 million. Would be a record quarter for Rocket Lab, and I have a lot of confidence that they will make that guidance because, well, their track record is that they usually do hit their numbers, and second of all, by the time that earnings call came around, we were partway through Q4 already, so they tend to have very good visibility into how things are going in the quarter. A lot of people seemed like they were taking notice as well to Rocket Lab's earnings calls, which was kind of nice. We saw Elon Musk tweeting about this chart from their presentation. He tweeted it at 6:39 p.m. Rocket Lab's earnings call starting around 5 p.m. and going until, I think it was like maybe 7 or something like that, maybe a little less. But yeah, I think this was still while the earnings call was going, so he was either watching live or someone raised this for him, but he was right on it. Now, some people, including Elon, complain that this is a bit of a misleading chart because, frankly, the line for SpaceX is so big that it would go way off the side of the page, so they just kind of cut it off and put the number there. Maybe there would have been a better way to make it clear that SpaceX's line is actually much longer than this, but honestly, it doesn't bother me too much. I mean, what's the big deal? It's a promotional chart, and I think all of us who can read or follow the industry know that SpaceX had much more than 15 launches in the quarter. Still showing Electron coming in second to the Long March from China, so not bad for a little company from New Zealand being third in the world. Also, Jared Isaacman shouting out Rocket Lab, saying that they had a solid performance and that they do insanely hard work. Like to see the friendliness between these two and Elon as well. I sort of read it as a bit more friendly banter than like, you know, a hate relationship like Elon has with, say, Sam Altman, or I would say Bezos as well. At least that's my perception of it. Let me know what you think. To me, Rocket Lab and SpaceX seem to have a bit more of a cordial relationship. and I do like to see it. But yeah, definitely some high-profile people are paying a lot more attention to Rocket Lab's earnings these days as well. Just wanted to point that out. Okay, so obviously the biggest news of the day was that Rocket Lab did sign their first Neutron customer, something I had been hoping would be coming either in this earnings or the next one, and I thought might be a bit of a catalyst. Turns out it was. So this is 2 dedicated launches in 2026 and 2027 with a commercial constellation operator. So, not government, it'll be commercial, and it is consistent with their target price for Neutron. So it's probably costing maybe 50 million, maybe a little less if they slightly discount these early launches, but they're not going to do steep discounts for Neutron. So that is nice to see. And I honestly think it took a lot of concerns away from the analysts, although the company's been saying for ages they're not worried about demand. But I think this just really allayed some concerns on the analyst side of things, even though Rocket Lab themselves never seem to have any worries about signing Neutron customers, especially for the first few years when their capacity will still be fairly low. We'll talk a little bit more about speculation around who this customer could be in the future, but very big to note is that they say this is beginning a productive collaboration that could see Neutron deploy the entire constellation. Obviously, we don't know how large this constellation could be, but certainly bigger than 2 launches. So very excited, and in the call they seemed confident that they could and probably would land those launches as well in the future. Continuing on with Neutron, the company reiterated that they see themselves being well positioned for the NSSL Lane 1 on-ramp this year, meaning they have to prove that they have a credible path to launch by December 2025. To me, that's a no-brainer, and I've been talking about NSSL so much because the potential launch contracts that companies can land in this program are absolutely massive. So nice to see Rocket Lab calling it out here. Rocket Lab also did receive a new research contract supporting Neutron's Archimedes development, valued up to $8 million from the U.S. Air Force. Yes, small figure. Of course, every little bit helps, but I think more than the dollar figure itself, it just goes to show the support the Air Force and government has for Neutron. And they even say right here, further recognizes Rocket Lab and Neutron as, a good solution for national security launch program, a potential real anchor customer for them in the future. There's also an extension of the point-to-point research for Neutron potentially delivering payloads around the world very quickly, and Neutron will now also be eligible for OSP-4, which is another indefinite delivery, indefinite quantity contract, meaning it's a max of up to $986 million, but not necessarily, anywhere near that. But there will be launches under that program they can potentially land. Some very cool pictures of Neutron as well. The next Stage 2 tank went for a full wet dress rehearsal, and everything seems to be really starting to shape up with Neutron's structures as well as Archimedes propulsion. Also had a picture of a Knight of the Realm for scale with Neutron's Hungry Hippo fairing, so you can picture that having a second one opening and closing to release a payload quite a bit larger than Electron, of course, and another great picture and sign of progress from the team, as well as some updates to the launch site and infrastructure. We have new tanks arriving and new concrete being poured, the flame trench and launch mount installation work in progress. Also, just a pretty cool render here of Rocket Lab's Mars sample return study concept, and just calling out why they feel they are suited to that massive contract. This one quite interesting. Rocket Lab, first of all, executing on their schedule for their current SDA-18 satellite constellation that they're building for Tranche 2, and interesting and very important, I think this is the first time they've actually acknowledged they plan to bid for Tranche 3, something I really thought they would do and have been expecting them to do. So that's 200 satellites under Tranche 3 of the SDA's Proliferated War blah 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 space domain program. When you think about Tranche 2, each satellite was worth roughly $28 million, let's say, and there's a lot more coming for Tranche 3, as well as the transport layer plus tracking layer for, tracking missiles and stuff like that. So this could be a massive revenue driver for Rocket Lab's space systems in the future, and I'm glad that they're talking about it and mentioning that they do plan to bid on that program's next tranche. In terms of the financials, everything was looking pretty good, at least to my eyes. We had the backlog at $1.048 million as of the end of Q3. Important to note, we'll talk about this a little bit later on, these two new contracts for Neutron are not part of that backlog because they happened after the end of Q3, and that is an 80% year-over-year backlog increase, mostly driven by that previously mentioned SDA contract. Very important for our models in terms of how much we're expecting them to make, that they say they expect approximately 50% of their ending Q3 backlog to be recognized within 12 months, and the remaining 50% beyond those 12 months. So that should give us an idea of what their revenues might be like next year. So perhaps a little bit of a slowing of the growth, but we'll have to see on that. Just because 50% of that $1 billion would be, about $500 million doesn't mean they can't sign and execute on and get some revenue from brand new contracts during the year next year, as we just saw with that launch, signed and launched within 10 weeks in their most recent Electron. So that can very much happen. This quarter, after a massive step up in space systems backlog, again, mostly from that SDA deal, we saw them realize some of the backlog from space systems dropping from 772 to 721, and the new contracts for Electron helping to make up the difference. Now they have $326 million in Electron backlog as well. In terms of revenue for the quarter, as I said previously, $105 million was that top line revenue number, which is a 55% year-over-year growth, driven mostly by those big MDA and SDA contracts in the space systems side. Now, operating expenses did increase. I think we all know that that's going to continue, and a lot of it is due to Neutron. So this quarter, we saw it was primarily due to increases in outside services related to legal and IT, as well as increasing staff costs. And we can see R&D spend increased due to a step up in Neutron development spending and ramp up of Archimedes testing and development, something that probably will continue until Neutron's first launch. In terms of an adjusted EBITDA number, we had negative $30.9 million in earnings before interest, depreciation, and amortization, as the company does continue to invest aggressively in Neutron and future growth. This is primarily due to that R&D spending for Neutron. Really looking forward to that switch starting to flip, where Neutron starts delivering revenue and the R&D spend diminishes, as opposed to right now with all that R&D spend happening and none of the revenue as of yet. Okay, and then we have the financial outlook for Q4. This is interesting. So $125 to $135 million of top line revenue. That would be by far a new record. So we really just hit a new high watermark this year, getting into the 100 million range, and now ramping up even further next quarter, looking at $125 to $135 million. A lot of this being delivered by some revenues for SDA and MDA. Looking at the margins, they are expecting a GAAP gross margin of 26 to 28%. This was versus Q3 had a 26.7%, so same range. And non-GAAP Q3 had a 31.3% versus 32 to 34, so slight improvement in margins on a non-GAAP basis, at least in Q4, is expected. Operating expenses for Q3 were about $80 million, and they're looking to go up to about $84 to $86 million next quarter. Again, Neutron spending. And interestingly enough, the shares outstanding will increase by about 3 million new shares in Q4, so that's probably chalked up to stock-based compensation. Maybe some of it is for that new COO they have. That comes out to about 0.6% dilution, something to keep an eye on. It is a small number, relatively speaking, but it is, a gradual drip of dilution from stock-based comp. I think it's really acceptable when it comes to acquiring and gaining new talent and investing aggressively in growth. When you see high top-line growth numbers, it's okay to accept some dilution, but you do want to keep an eye and make sure it is not too high, too fast, especially if growth starts to peter off. When it comes to the balance sheet, we are seeing that the cash and short-term investments dropped from $496 million to about $442 million. So call that about $54 million, something like that in losses. On to the Q&A, where there were some interesting details, but it was incredibly long, and I'm not going to lie, I was starting to fade by the end of the night, going on live streaming 2 hours, taking notes. I did tweet out all my notes. If you want to follow my Twitter account as well, you can join our Discord, and I'll share them there, link in the description below. But highlights: the management is very confident that there will be more launches from this Neutron customer than the first two, which sounds exciting to me. I don't know how many, and I'd love to, speculate on who the customer will be. I don't think it's Amazon, because they said potential to launch the whole constellation, and we know Amazon has many other launchers for their Kuiper. We also know it's not going to be AST, because they just had their own earnings call and talked about a new deal they had for launches with both Blue Origin's New Glenn as well as SpaceX. So it's not one of those two. I heard maybe eSpace being thrown around, or perhaps Astranis, or maybe it's one of their current customers, because they did say it was a familiar name, so I take that to mean a name a lot of us would recognize. They do still expect to hit at least 15 Electron launches. They said within that 15 to 18 range, although I would say personally 18 is probably highly unlikely to happen. So I would shoot for maybe 16. At least that would be my hope. They did talk about the NSSL a bit more to clarify that once you get onboarded, you don't automatically get launches. You just are then able to bid on individual task orders that come available. They felt like their first task order under NSSL would more likely be something like 2027. As well, they did have more Electron contracts signed this quarter than is normal. And Adam Spice shared that Neutron spent this quarter was $44 million. So you think about adjusted EBITDA being in the 30s. Clearly, without this Neutron spend, we would be looking at positive adjusted EBITDA at the very least. Probably not positive net income, though, at least this past quarter. They did say they think commercial demand for Neutron remains strong, but they were asked about the new U.S. Trump administration and said they're bullish on the new administration. They have a greater focus on space as well as value for money. And Neutron's first launch will not have revenue, but they said it will have contra R&D revenue. And I believe what this means, again, I didn't take accounting, but they did receive some contracts for working on Neutron from the Space Force, for working on their second stage, as well as that recent $8 million Archimedes. So I think that contra R&D basically takes some of the liability of those grants off the books as they kind of completed those tasks, if you were. But again, I'm not an expert accountant, so you guys can let me know down below. I'm sure someone will. And the space application, they said they probably won't reveal it, at least reading between the lines, until Neutron starts to have a decent cadence, because that is really the key to being able to launch their constellation. So until they have that capability, no point in really trying to announce something super far in the future or, work too hard on it. They need the keys to space before they start working on the infrastructure in space. Wrapping it all up, to me, the biggest stories for this quarter were top-line growth and continued progress on Neutron, looking pretty good. So now that we have the estimated revenues for Q4, we can see that they're should be making around $456 million in full year 2024, and that is a $211 million increase over the previous year of 2023, which had $244 million. So that's an 85% year-over-year top-line growth. Very strong number. Yes, 2022 to 2023 wasn't as strong when it comes to revenue growth, but you average them out over, say, the entire period that they've been public, I think you'll find that their compound annual growth rate is extremely strong. And of course, once Neutron comes online, that's going to ramp up even more. those were our highlights from Q3's earnings call. Let me know if you thought it was a good quarter for the company. Clearly, the overall markets did. What was your biggest surprise? What is your biggest takeaway? What are you most excited about? And are there any details that I didn't mention here you think are important and are worth mentioning? Let's continue the discussion down in the comments below. Thank you guys so much for watching. As always, it remains a very busy time for the channel right now around earnings, and I have a few more videos planned shortly, so stay tuned for those around Rocket Lab. I hope you have a great weekend. I will see you in the next video. Bye for now.